In recent years, virtual real estate has emerged as a significant player in the digital economy, capturing the attention of investors and tech enthusiasts alike. This shift from physical to virtual investments highlights a transformative trend where digital assets are becoming as valuable as their tangible counterparts. As people increasingly engage in online environments, the demand for virtual spaces is skyrocketing. Virtual real estate encompasses digital land, properties, and spaces within virtual worlds, offering unique opportunities for creativity and commerce. With the rise of technologies like blockchain and virtual reality, investors are recognizing the potential of these digital assets. The growing significance of virtual real estate is not just a passing trend. It represents a fundamental change in how we view property ownership and investment. As we delve deeper into this topic, we will explore the current trends, opportunities, and challenges that define the virtual real estate landscape today. The virtual real estate market has witnessed explosive growth in recent years, with sales and investments reaching unprecedented levels. In 2022, the market was valued at approximately $4 billion, reflecting a significant increase from just $1 billion in 2020. This upward trend has been fueled by rising interest in digital assets, with investors recognizing the potential of virtual properties. Notably, sales in platforms like Decentraland and the Sandbox have surged, with some plots selling for hundreds of thousands of dollars. Additionally, investment from major companies and venture capitalists has further legitimized this sector. As of 2023, analysts predict that the market will continue to expand, potentially reaching $10 billion by 2025. This growth indicates a shift in how people perceive real estate, moving from traditional properties to virtual spaces as viable investment opportunities. Virtual real estate refers to digital properties that exist within online environments, often represented as parcels of land in virtual worlds. These digital spaces can be bought, sold, or developed much like traditional real estate. Leading platforms in this burgeoning market include Decentraland and the Sandbox. Decentraland allows users to create, experience, and monetize content and applications, while the Sandbox focuses on user-generated content, enabling players to build their own games and experiences. Both platforms utilize blockchain technology, ensuring ownership and authenticity of virtual assets through non-fungible tokens. As the digital economy expands, virtual real estate is becoming increasingly significant, attracting investors and creators alike. The potential for immersive experiences and community engagement in these virtual environments makes them appealing. With growing interest from various sectors, virtual real estate is not just a trend, but a transformative aspect of how we perceive ownership and investment in the digital age. Investing in virtual real estate presents several compelling advantages that attract both new and seasoned investors. One significant benefit is the lower entry costs compared to traditional real estate. With virtual properties often priced much lower, individuals can start their investment journey without needing substantial capital. Additionally, the potential for high returns is enticing. As virtual worlds expand and gain popularity, properties can appreciate significantly in value, offering lucrative opportunities for investors. Another advantage is the ability to reach a global audience. Unlike physical properties, virtual real estate is accessible to anyone with an internet connection, allowing investors to market their properties to a diverse and expansive demographic. This global reach can enhance the potential for rental income and resale opportunities. Overall, the combination of affordability, high return potential, and worldwide accessibility makes virtual real estate an attractive investment avenue in today's digital economy. The virtual real estate boom is significantly driven by technological advancements such as blockchain, non-fungible tokens, and virtual reality. Blockchain technology ensures secure transactions, providing transparency and trust in ownership records. This decentralized ledger eliminates the need for intermediaries, making buying and selling virtual properties more efficient. Non-fungible tokens, or NFTs, have revolutionized ownership in the digital space, allowing unique virtual assets to be bought, sold, and traded. Each NFT represents a distinct property, giving buyers proof of ownership and authenticity. Additionally, virtual reality enhances the immersive experience, enabling potential investors to explore properties in a three-dimensional environment before making a purchase. This technology not only attracts buyers, but also creates engaging experiences for virtual events and gatherings. Together, these advancements are reshaping how we perceive and invest in virtual real estate, making it an exciting frontier in the digital economy. The virtual real estate market is increasingly attracting younger generations, particularly millennials and Generation Z. These demographics are more inclined towards digital assets, driven by their familiarity with technology and online platforms. Millennials, who are now in their 30s, have witnessed the rise of the internet and digital currencies, making them more comfortable with virtual investments. On the other hand, Generation Z, the digital natives, have grown up in a world dominated by social media and online interactions, leading to a natural inclination towards virtual real estate. Research indicates that these younger investors are not only seeking financial returns but also value the innovative aspects of digital assets. They appreciate the potential for creativity and community engagement that virtual real estate offers. As a result, this demographic shift is reshaping the landscape of real estate investment, emphasizing the importance of understanding their preferences and behaviors in this evolving market. Investing in virtual real estate presents unique risks that potential investors must consider. One significant concern is market volatility, as the value of digital properties can fluctuate dramatically within short periods. This unpredictability can lead to substantial financial losses for investors who are not prepared for sudden downturns. Additionally, regulatory challenges pose another layer of risk. As governments around the world grapple with how to classify and regulate digital assets, changes in legislation could impact the legality and profitability of virtual real estate investments. Investors may find themselves navigating a complex landscape of rules that can vary significantly by jurisdiction. Furthermore, the lack of established market standards can lead to issues such as fraud or misrepresentation. To mitigate these risks, thorough research and a cautious approach are essential for anyone looking to invest in this exciting yet uncertain market. Understanding these challenges is crucial for making informed investment decisions. One notable case is that of a digital artist who purchased virtual land in Decentraland for approximately $4,000. Within a year, this investment appreciated to over $100,000 after developing an art gallery that attracted significant traffic. Another example involves a tech company that invested in virtual real estate within the sandbox. They created an interactive gaming experience, leading to a return on investment of 200% within 6 months. Additionally, a group of investors pooled resources to acquire a virtual estate in CryptoVoxels, transforming it into a popular event space. This venture generated substantial revenue through hosting virtual concerts and art exhibitions. These case studies illustrate the immense potential of virtual real estate investments. They highlight how creativity and strategic planning can lead to significant profits in this innovative market. As more investors recognize these opportunities, the interest in virtual properties is expected to grow exponentially. As we look ahead, the virtual real estate market is poised for significant growth. Experts predict that the market could expand exponentially, driven by an increasing acceptance of digital assets and a growing number of platforms. Emerging trends to watch include the integration of augmented reality and virtual reality, which will enhance user experiences and attract more investors. Additionally, the rise of decentralized finance may lead to innovative financing options for virtual properties. The increasing popularity of the metaverse will likely create more demand for virtual land, making it a valuable commodity. Furthermore, as more businesses establish a presence in these digital spaces, we can expect a surge in commercial virtual real estate. Overall, the future looks bright for virtual real estate, with opportunities for savvy investors to capitalize on this evolving landscape and secure their place in the digital economy. Traditional real estate investors are increasingly recognizing the potential of virtual real estate and adapting their strategies accordingly. Many are diversifying their portfolios by incorporating digital assets, understanding that the virtual landscape offers unique opportunities. Investors are leveraging their existing knowledge of real estate principles while learning about new technologies like blockchain and non-fungible tokens. They are also attending virtual seminars and engaging with online communities to stay informed about market trends and investment strategies. Some traditional investors are forming partnerships with tech-savvy individuals to bridge the gap between physical and virtual assets. This collaboration allows them to navigate the complexities of the digital space more effectively. Additionally, they are exploring virtual properties on platforms such as Decentraland and the Sandbox, recognizing the potential for significant returns. By embracing these changes, traditional investors are positioning themselves to thrive in an evolving market that increasingly values digital assets. Social media and online communities play a pivotal role in shaping the virtual real estate market. Platforms like Twitter, Discord, and Reddit have become hubs for investors to share insights, trends, and opportunities. These communities foster a sense of belonging, allowing investors to connect with like-minded individuals and discuss strategies. The viral nature of social media can lead to rapid increases in demand for specific virtual properties, often driven by influencers or trending discussions. Furthermore, these platforms serve as a source of real-time information, enabling investors to make informed decisions. Online communities also provide educational resources, helping newcomers understand the complexities of virtual real estate. As investor behavior becomes increasingly influenced by social media dynamics, the power of collective sentiment cannot be underestimated. This interconnectedness not only shapes market trends but also creates a vibrant ecosystem for virtual real estate enthusiasts and investors alike. For new investors eager to enter the virtual real estate market, thorough research is essential. Start by familiarizing yourself with various platforms, such as Decentraland and the Sandbox, to understand their unique offerings and user bases. Join online communities and forums to gain insights from experienced investors and stay updated on market trends. Analyze recent sales data and property values to identify potential investment opportunities. When purchasing digital properties, ensure you verify ownership and authenticity through blockchain technology, which provides transparency. Set a budget and stick to it, avoiding impulsive purchases driven by hype. Diversify your investments across different virtual environments to mitigate risks. Lastly, be patient. The virtual real estate market can be volatile, and success often requires time and strategic planning. By following these best practices, new investors can navigate the digital landscape more effectively and make informed decisions. In summary, virtual real estate investments are rapidly gaining traction among savvy investors due to their unique advantages and the evolving digital landscape. Firstly, the lower entry costs compared to traditional real estate make it accessible for a wider range of investors. Secondly, the potential for high returns is significant, especially as more individuals and companies recognize the value of digital assets. Additionally, the global reach of virtual properties allows investors to tap into diverse markets. Technological advancements, such as blockchain and non-fungible tokens, are further enhancing the appeal of virtual real estate by providing security and transparency. Furthermore, the demographic shift towards younger investors, particularly millennials and Generation Z, indicates a strong future demand. Ultimately, as virtual real estate becomes a staple in investment portfolios, it represents a forward-thinking opportunity that aligns with the digital economy's growth trajectory. As we conclude our exploration of virtual real estate, it is clear that this emerging market holds transformative potential for investors. The shift from traditional to digital assets is not just a trend. It represents a fundamental change in how we view property ownership and investment. Virtual real estate offers unique opportunities, including lower entry costs and the chance for significant returns. With advancements in technology and growing interest from younger generations, the landscape is ripe for innovation and growth. As we look to the future, it is essential to recognize the viability of virtual real estate as an investment option. By embracing this digital frontier, investors can diversify their portfolios and tap into a market that is only beginning to unfold. So, consider taking the leap into virtual real estate. It may very well be the investment opportunity of the future.